everyone. This is a cozy space, so I'd love to actually see some of your faces a little closer to me, so I have people I can make eye contact with. I'd like to get started. They've given us, obviously, a panel on a dense subject right after lunch, so way to go, challenge right from the start. Without much further ado, I'd like to kick off our panel with our panelists, so please, with a rousing round of applause, I'd like to welcome on stage Jalak Jobanputra. We have Dr. Jeffrey Chi, John Medved, and Chris Rogers. And I am not the person that you see as the moderator in the agenda right now. My name is Natasha DSouza. I have been kindly asked by the organizers to step in to be your moderator, which I am excited to do because this is a subject, as a journalist who has been covering technology in the Middle East and broadly Asia for the last couple of years, a pain point and also a fascinating topic that I have heard reams about from any number of founders from all over the region. Now, before we get started, I thought I'd like for each of you perhaps to share with the audience, maybe 1 to 2 minutes, a little bit about yourself and the firm that you represent, and maybe what SALT Abu Dhabi has been like for you, in the last 2 days that you've been here. We'll start with you, Chris.
Okay. Hello, all. Fortunately, I think there's a really small audience, but the light is so blinding that I can't really tell, so I'm pretending it's standing room only. I'm Chris Rogers. I'm a partner at Lumia Capital. We're a San Francisco-based early growth stage venture fund, so looking mostly at Series B and C. We invest primarily in the US in the enterprise SaaS space, but we also do some opportunistic investing in the regions where we help our US companies grow, and that is a focus on Southeast Asia, LATAM, and MENA. My background is in wireless, and the company that I co-founded in the US, which was called Nextel, we expanded into all of these regions, which has had me coming to places like this for 20 years. Certainly the SALT conference here, I think it's one of the many positive steps that Abu Dhabi and the Emirates more broadly and the GCC more broadly have taken to bring sort of global level exchange of ideas. And so it's been good.
I mean, I can see from our panel already, because we have global voices, and certainly some of you have been actively coming to the region. What about you, John? You and I had a great conversation yesterday, so why don't you go ahead and regale the audience with a little bit about you?
I'm John Medved. I'm the founder and CEO of OurCrowd. We're an alternative venture platform that allows accredited investors, family offices, or institutions to literally pick their own venture deal and to join individual single company venture funds where we act as a GP. People come in as LPs. They come in and write checks from starting at $10,000 if they're a high net worth accredited investor, and go up to $10 million. So they can build their own venture fund. We have 200 deals like that. And then we also have 19 different venture funds where we aggregate, again, the crowd, as it were, and write a single LP check in a venture fund, and that can go from $5 to $50 million. We're managing right now $1.3 billion. We have 13 offices around the globe. We're headquartered in Jerusalem, Israel, and we're delighted to be here in Abu Dhabi. The hospitality has been unbelievable, and we're real believers in positive change coming to the region.
We're delighted to have you. Yeah. Jeffrey.
Hi, everyone. My name is Jeff Chi. Is the mic working? Tested? Okay, yeah. So my name is Jeff Chi. I'm co-founder and vice chair of Vickers Venture Partner. We are a global deep tech fund. We invest in deep technologies around the world. We believe that technology and innovation is a global phenomenon, and therefore, in order for us to make informed decisions about our investments, we really need to understand, have our finger on the pulse of technology developments globally. I'd like to describe our business as investing in breakthrough technologies that solve big global problems. And the reason for big global problems is attached to that big problem is very often a very large market. And in a way, we don't like to guess whether a market is going to buy if we build a certain product or not. We like to build a certain product around or invest in the technology that will get to a product around a very known market. That is sort of philosophy. I sit in Shanghai. I manage investments across Asia. I have counterparts sitting in the rest of the world. We have a fair presence in the U.S. as well, and one of the things that we are always doing is thinking about our companies and how to help them open up new markets. And for that, I think SALT has been a great experience for us to allow us to have the dialogues and the conversations with a lot of people here that we look to form partnerships with.
Thank you, Jeffrey. And Jalak, who I've been seeing in the region for years because we keep meeting at conferences time and time again.
Hi, I'm Jalak Jobanputra. I'm founder of Future Perfect Ventures. We're an early stage fund based in New York, investing globally. I launched the fund in 2014 on the thesis that the next wave of major technology innovation was going to be global and distributed. And a lot of the thinking came out of, I've been a VC since '99. I started off my venture career in Silicon Valley, invested through the internet boom and bust, worked on the Netscape IPO when I was a banker before that, and I thought we were prime for this next wave. And was very interested in how the proliferation of data was going to lead to new business models, not just on the data analytics side, but around edge computing. Went to my first Bitcoin conference in 2013 as part of my exploration of the thesis, and just became really interested in blockchain technology's implications across verticals. And so about 80%, we're investing out of the second fund, 80% of our funds are invested in blockchain infrastructure technologies, and the balance is in AI and IoT.
Thank you. We have obviously sort of very power-packed individuals on this panel today. So I'm just going to start off with my opening question for this panel. As someone who has, again, written about the region a fair amount and has spoken to a number of founders, what a lot of people say is we have so many conferences in this part of the world. We see so many investors from all parts of the world keep coming to the region. How do we start attracting that kind of capital into our businesses? What is preventing us from being able to access that kind of capital? Are we not investable enough? Or is this part of the world essentially being seen as an ATM where you have people coming in here raising a lot of money and it simply exits the country and we are still starved of capital? So that's my opening statement. I would love maybe I'll start with you, Chris, because you've been active in this part of the world with Lumia. What is your take on that?
So I think yes, most investors come to this region and take money to invest in their thesis in other parts of the world. From a venture perspective, which is the topic here, it has been difficult to find what you would say global standard technology companies to invest in. We've been lucky. But we get to see companies in Southeast Asia, LATAM, and of course the US. And so we can benchmark and understand the few breakout companies. I think we're seeing an interesting evolution that's over the long term, or let's say the 5 to 10 year term, very positive in that you have finally some local success stories, which breeds both excitement in the entrepreneurial community. It's helped the local funds actually get funded, so the local VCs. And I get a lot more texts now saying, what's the next Kareem, Chris? These are from investors around the world. So they're more interested in the region. On top of that, you have significant and now well-run generally sovereign-backed programs in Bahrain, here in Abu Dhabi, and Saudi that are going to pump, $1 billion+ into the ecosystem. So there is no lack of funding. In fact, I would argue there really has never been a lack of funding. It's been a lack of funding that marries up to the business model. And frankly, a lot of the businesses shouldn't be funded. Just because they start a business doesn't mean they merit funding. And so you have that, but now you're seeing a much more sophisticated level of company and founder. You're seeing more sophisticated local investors, and you're going to have this influx of capital that is being used to draw in venture expertise from around the world. The downside is likely to be a rocky road for the next 5 years or so, because I would say the ability to time a huge influx of capital with the right number of companies growing is, I mean, that's virtually impossible. So I think they're priming the pump, and valuations may soar a bit. So it might be a bit of a rocky time for outside investors to come looking, but eventually that's going to settle down, and you're going to have a lot of well-trained entrepreneurs. You're going to have a history of success stories. You're going to have more flexible hiring policies throughout the GCC, and so I'm really optimistic over that 5 to 10 year period.
Okay, so maybe really quickly, if you could share with us what you said a global standard of a company. What to you qualifies as a global standard? And I'd love for each of you as well just to quickly add to that too.
Yeah, you know, it's interesting because I think usually we see it in terms of what disqualifies it. You know, it's well, we own an app shop, and my brother's going to run that. He's going to own half of this startup, and, you know, a whole complicated cap table and everything like that is way too much hair on a deal, and you can imagine that normally I would like hair on almost anything, but
He made a joke. Let's laugh.
but on a deal, I don't like it, and so it's these complexities that arise that make it very easy for a global investor who has other options to say, too complicated. I knew I didn't want to do business in the Middle East. I knew that was going to be too complicated. So I think that's how I view that.
Okay, John.
So, look, I firmly believe that there has been way too much concentration in the venture and entrepreneurial investment landscape globally, right? And if you've been in certain hotbeds, you got funded, if you're elsewhere, you're pretty much, you know, out to lunch. And that is changing. We're investing all over the world. We're seeing great entrepreneurs come to the table all over the world. And I think one of the real advantages is that in this AI-enabled world where, I don't remember who it was who spoke, I think quite well yesterday on stage, about the fact that it's not about investing in AI, right? That's going to happen in only a few countries. Are going to develop the semiconductors that will, you know, we're doing that, accelerating AI routines on the edge or, you know, in the data center and whatnot. The real challenge is going to be enabling real businesses. And whether it's energy or it's ag tech or it's healthcare or it's education, these are traditional regulated industries which are much, much larger than some of the specific tech areas. And I see no reason why those kinds of deals and companies can't be built here. I mean, I've seen my country develop from scratch a entrepreneurial hotbed, right? When I built my first company, there wasn't a single venture capital fund. Today, there are over 200 venture capital funds in Israel. We will invest this year about $10 billion in Israeli startups. Okay, so to give you an idea of how crazy that is, and that's developed in literally about a little over 25 years. And I think that this will happen here, and I'm hoping that it will happen in a state of regional cooperation where you will build truly global companies, where investors will come from the States, they'll come from my country, they'll come from Asia, and help you know, encourage the young entrepreneurs.
You know, just to your point about regulation, I mean, there are a number of founders I know within, say, in fintech, or looking to build something next generation in financial services who want to be regulated, have sought regulation, the right licensing, but for a lot of investors here, that just seems too complicated. A regulated business is really difficult to scale and to grow, and you literally, one after the other, a lot of investors here just want something simple, straightforward, let's not deal with regulation, or why are you worried about regulation? build it if you break any rules, and you can ask for forgiveness later?
Look, I think regulation is a barrier to entry, a wonderful barrier to entry. And as an entrepreneur who's running a fintech, my platform's a fintech, we're regulated all over the world. We file for licenses. We do KYC and AML. I've got 7 lawyers on full-time staff. And I view that as a challenge, but as a real opportunity, because good luck with those who are competing with us, in our footsteps.
Jalak, maybe quickly to you, because you've been coming to this part of the world for a number of years. I'd love to see, I think with each trip somewhere, it's like different layers to an onion.
Yeah.
And for you, Jeffrey, this is your first time here in Abu Dhabi, correct? So maybe a little bit of the contrast and perspectives. You've been coming here year on year. What in this particular trip has changed about your outlook towards the Middle East, and maybe your initial reaction, Jeffrey, on the region and what you think could be interesting opportunities?
Sure. So I was born in Nairobi, even though I've spent most of my time living in the U.S. My investment career has been global, and if you just look at the demographics around the world, right, the more developed world is slowing in growth, and their aging populations. A lot of the future is going to be in regions outside of places like Western Europe and the U.S. And so I've seen more and more entrepreneurs, even in the U.S., want to build businesses that can address some of the challenges and opportunities in the emerging markets. And we were talking earlier, and when I moved back to New York from the Valley in 2004, New York City barely had any seed funds. I worked with New York State to put together a seed fund. And I looked at kind of the ecosystem in the Valley and everything that existed there, which includes serial entrepreneurs, includes success stories, includes angel investors, includes seed funds. And I think you need all of those pieces in place. Now, that doesn't happen overnight. Some of it gets supported by government regulations and policies. And so I look at this just a span of 10, 15 years in New York City and what's happened. And we have many unicorns there right now, have had lots of great exits. We have a city government that used to focus on Wall Street and the media industry and realized they need to focus more on the tech sector. So I think this is an issue around the world, but it can all develop very quickly, but you need that early stage capital that's willing to take the risks. And I think in certain regions like this, and India is another example, where there's been so much growth in real assets and infrastructure, and that's where a lot of the money has gone. But as people are looking for other alpha opportunities and also understand how important it is from an economic development perspective to have entrepreneurship, that we're definitely, I mean, I've seen a huge difference from my first trip to this region to now, and it's not been that long. So I'm very hopeful that we will be making some investments here, and especially in like fintech and things like crypto, and there's a lot of kind of regulatory opportunities that less kind of developed markets can really leapfrog some of the other regions like the United States. I mean, I'd say the United States is probably the most kind of behind on some of this crypto regulation, right? And so there are huge opportunities for entrepreneurs as well as investors in other parts of the world. And just like, in Kenya, if you look at mobile money, right, that was like ground zero for mobile money and an example for the rest of the world. And so I think there's opportunity anywhere in the world for the next generation of companies for that.
Jeffrey, maybe your initial reactions from, having been here the last 2 days.
Yeah, well, so I have been traveling here, not to Abu Dhabi itself, but in the region for a fair bit, and not very frequent trips. And I have seen improvements. We do have a couple of companies here. One we invested in a company here doing marketing campaigns for e-commerce. The other is a company that does artificial intelligence enhanced business analytics. and that was a company that we invested initially in Southeast Asia, and they set up shop here. So we do see a lot of promising opportunities, and like most other markets, I think everyone does indeed have challenges. So I do think there are opportunities if you look hard enough, you know where to find them, and the market is relatively unique, and I think the opportunities will be unique. Now, we've been investing in Asia, specifically in China, since 2005. This is when venture capital started in China. We've been investing in Southeast Asia since 2005, but the market's really only taken off maybe in the last 6-7 years. When we started investing, China was maybe 2 billion invested capital a year, 1 or 2 billion invested capital a year. Today, it is running 60, 70 billion invested capital a year. 2 years ago, it overtook the U.S. as the largest venture capital market globally. I think this past year has slid back down to second, but it's neck and neck with the U.S. Southeast Asian has 6 years ago I used to be chair of the Singapore Venture Capital and Private Equity Association, so I have some of these numbers. But 6 years ago, Southeast Asia as a whole was 250 million invested capital. I would imagine that venture investing in the region today is more than that already. Today, Southeast Asia represents about, I think last year we crossed $8 billion. So the increase is actually very, very quick. And if I were to draw parallels between these two regions, and I think that's relevant for this region as well, some of the common traits that I see first is involvement of government. I think government needs to take an active role to actively promote. Venture capital itself, even in the U.S., started with companies in this space. The market wasn't ready to invest in this, so there was a market failure to be able to invest in this asset class, and government had to step in the U.S. in particular. It was related to tax breaks to investors into venture capital funds. That was really what took off. And Singapore government took a very, very active role. A lot of the policies they put in place were modeled after Israel, and that's sort of what allowed the Israel system to take off as well. So that's one, and I'm encouraged to see that the conversations that we've been having with some of the sovereign wealth funds here are thinking in the right direction as to how do we grow investments into that space. The other one is really the onset of technology, right? And technology basically can leapfrog, and we've seen time and time again that China started as an importer of ideas, and so it used to be copy to China, and increasingly now they're becoming an exporter of ideas. And if you look at the Southeast Asian developments, particularly Indonesia, they're looking to say, do I borrow a U.S. model of business model, internet business model, or a Chinese one, right? And because of the demographics, because of the stage of technologies, consumers are less adoptive to PC these days, but everyone's got a computer in their pocket anytime. So those are just some of the trends, and I think business model needs to adapt to local geographies and local culture, and this region needs to find what works here. And then when they do, this thing will really take off.
Okay, so less importing some kind of ecosystem model that exists somewhere else, but let it grow organically, and government leading the way is often that first step to seeing the change. I would love to take at least maybe a question or two from the audience. Does anybody have any questions before we wrap up the panel? Because we're small enough that we actually can. Do I see any hands? No? Okay.
It seems like culturally this is quite consistent and globally. Nobody's about to ask questions.
Okay, so
I was going to jump in on the regulatory piece, though, because
Okay,
you
go ahead.
mentioned that. I think you're seeing, as is typical in the region, a lot of aggressive action from the GCC, probably led by the Emirates. You have things like ADGM, where licensing is simplified, and the attempt to sort of set a new global standard that everybody would feel comfortable with. But historically, this venture ecosystem on the founder side has been deeply crippled by the regulatory environment. The ability to get a startup going in the Emirates was usually fairly easy, but taking that to Saudi was a major hurdle. And the old business models of working with a local family to sort of deal with the licensing and all of that is not really how the tech world operates. And so there were a lot of roadblocks. Now, they're super aggressive now. Sagia has really made some innovations, but you still have to look at, say, take Kareem, for instance, to get to that global scale, to get to a multi-billion-dollar exit, which is the first by far in this region of that type of scale where virtually every investor on the cap table is a winner. They are in 13 different countries, and that's 13 different regulatory bodies, and the linkages between them are almost nil. And so while the gross demographics of the MENA region are terrific, and the youth population and the growth and all of that are fabulous, there really are a lot of, they're not nuances, they're really big black and white differences that keep people from penetrating it as one market. It's getting better, but that isn't where it needs to be yet.
Okay, so some of that, a little bit of homogeneity in terms of being able to approach the market and take something that works in the UAE and easily replicate in other geography would be beneficial to scale.
Yeah, absolutely, and that would be beneficial to people having comfort investing in the region.
Correct.
Because they don't want to have to understand those nuances, right? That's a big due diligence lift if you're a San Francisco VC and you need to know the difference between Egyptian data privacy, Pakistani data privacy, Moroccan, Libyan, all that. That's a big lift.
Okay, so since we're almost running out of time, just very quickly, if I could get maybe 30 seconds from each of you, what to you means opportunity when you're looking at a business? Like what quantifies an opportunity to you? I'll start with you, John, maybe.
Passion from the founders. I mean, basically, there are three things that are important in making, certainly an early stage, but I would say at any stage venture investment, and that's team, and team. And you need to find people who have huge heart, who are going to work hard, who have fire in their eyes and then maybe in their belly. What I'm excited about now is people who are going to start collecting data. I think that this is really almost an even playing field globally, where people have not been collecting data, and the mistake made in this new world of AI is it's all about the algorithm and what you do with the data, and that's not true. Okay, it turns out that there'll be people who will have algorithmic brilliance, but right now you can't make any of that work without data. And I think that if this region really gets out ahead and starts collecting data in medical and education, I was talking to a guy who was doing food measurement of high school kids and what they're eating and nutrition and collecting that data here. I thought that was brilliant. Okay, and I think that that's where the cutting edge is going to be.
Okay, thank you. Jeffrey and then Jalak, quickly.
Yeah, I mentioned this a little earlier. So we like to find breakthrough technologies that solve big global problems, because attached to big global problems is an attractive market, and we're going to make our investments returns and provide great returns to our investors. But really, I think more important, just as important, is that when you solve big problems, you very often create a very big impact on humanity and on the world, and I think that's really important as well. And actually, one of the things I was very happy to see here at SALT was a big emphasis on sustainability, ESG, and all that. So,
thank you.
Yeah, I agree with that. And one of the reasons I became so excited about blockchain technology in combination with machine learning and data analytics is this whole concept of taking costs out of the system. We had to build, I'd say the 20th century was full of intermediaries because there were really no other options. As trade got more global, you needed to be able to trust the counterparties, and you had to set up systems to do that. Now we've had computers that now allow us to do a lot of things. And we're at a point where technology is going to allow us to verify those transactions without intermediaries, and that can open up so many more business models and open up opportunities for peer-to-peer transactions and things that just weren't possible from a technology standpoint, even though the internet addressed a lot of information flow. This is really about transaction flow, and that's what I'm really excited about for the future.
And last but by no means least, Chris, with Lumia and its obviously track record in the region, today when you're scouting for opportunities in the region, what does that look like to you?
Well, let's go back to data. I mean, yes, the founders, critical. But when you invest primarily at a Series B level, then you get to see data that the company has collected that shows you that the product is working, the customers are engaging, and you can understand why X amount put in is going to create Y amount of return. And there is no excuse now for an entrepreneur not to be critically focused and making all of their best decisions based on the data that they're collecting as an entrepreneur.
Thank you, and thank you each one of you for the insights you brought today to our panel this afternoon, and thank you all of you for being our audience. I hope you found this panel useful and informative, and I'm sure if anybody wants to reach out to any of you, they may be able to find you out on the conference floor.
Yeah.
All right, great. Thank you very much.
Thank you.
Have a good afternoon. Enjoy the rest of your time here at SALT.